Hello traders, and welcome to a new video on managing your trades and managing your emotions as well. What I'm going to do today is give you guys 5 tips that has most helped me with my trading, and hopefully they can help you as well. Now, I've been trading for 7 years. I've traded spot, I've traded futures, I've traded options across multiple markets, with crypto being my favorite, as you can probably imagine. And I've found that there were patterns to some of my larger losses, and there were also patterns to times where I had more consistent gains, and eventually I worked out strategies to prevent myself from making a large mistake and losing a lot of capital. So that's what I'm going to be sharing with you guys today. Tip number 1 is going to sound very generic, but I am going to get specific with it. It's to think mathematically when you're opening a trade. The main issue that I had when I was opening a trade and it led to a larger loss is I didn't really have a plan. I was just kind of thinking that price would go up or down. I just opened a trade. Okay, opened a trade. Hopefully price goes in my direction. The issue with that is there's limited upside and unlimited downside, because if price goes in your direction, you take profit. Yay, everyone's happy. You're happy you took the trade. Price goes against you because you don't have that plan. Anything can happen. Liquidation. Going into such a large loss that you don't want to take it. Or going into a loss and then waiting until you get to break even, but then price never goes to break even, so you just hold that coin forever until it goes to zero. Now, those 3 things that I said are not the most pleasant, but there are ways to prevent yourself from just opening a trade willy-nilly, and here they are. You set a stop loss and you set a take profit so that you already know mathematically how much you're going to lose at a max. If I have a $10,000 position, I'm long, and I have a 1% stop loss right below my the point at which I enter my long, I know for a fact that I'm probably going to lose anywhere between $100 to $110 because of slippage from that trade. If I'm not comfortable losing $100 to $110, I'm not going to take that trade. I'm either going to lower my position size, I'm going to make my stop loss a little bit closer, or I'm just not going to take the trade. Now, I can't stress just how important the mindset change is when you go from just taking a trade without really a plan, you just hope it goes in a direction, versus taking a trade with a mathematical calculated upside and downside. Hey, if price goes here, I lose $110. If price goes here, I make $220. So hopefully we make $220. But if we lose the $110, we lose the $110. It's then we take another one, and nothing. It's fine. It's just the normal day of trading. So that's my first tip, is to try to make the beginning of your trade as mathematically sound as you can, because if you don't, that's where that can lead to larger losses a little bit later in that trade. Tip number 2, if you are in an unrealized loss, place a stop loss and a take profit and then leave your computer. What I mean by that is, let's say you take a trade and price goes against you 1%, and you didn't set a stop loss or take profit, you're just in a 1% loss, and you're like, oh my God, I really want price to go back to break even. Resist the temptation to just keep laddering, meaning, if you bought and price goes 1% down, you just buy more and more and more to get a better break even. That's a very tempting thing to occur, very tempting temptation. But instead, what you can do is you say to yourself this: okay, so price went against me 1%. This happens from time to time. Cool. I mean, not cool, but okay. And what I'm going to do to make myself not make a large mistake on this trade is I'm going to just set a stop loss and a take profit right now. So what I'm going to do is I have a stop loss of 1% right now, which, because we're already in a 1% loss, would mean we would lose 2% total. And I'm also going to set a take profit, somewhere higher. You have now just transitioned that trade from, what's going to happen, I don't know. If price goes against me, I might get liquidated or hold this coin for the rest of eternity, to I know how much I can lose. So that transition from, an emotional kind of trade where you're in pain because you're in a loss and you're just hoping price goes back to break even, you've transitioned that to a mathematical trade. Now, that's the first part of that tip. The second part's just as important. Leave your computer, because I know it can be tempting to just watch the trade, to watch it, but that's where other mistakes can occur as well, where you do things like cancel your stop loss because you don't want it to be hit, or you take on more risk. Instead, just put a cap on that trade. I'm not saying take a loss in the trade right away. That's what a lot of people say if you go into an unrealized loss, but that's not really the best advice, guys. It's not. Sometimes there are times where you should actually be holding and not just taking a loss because you're down 1%. Sometimes the market fluctuates, and if you expect it to fluctuate back upward, then you just put a stop loss, you put a take profit, and you hope it fluctuates upward. If it continues going against you, your stop loss hits and you're out of the trade. So that's what I like to do when I just kind of entered willy-nilly and I didn't really know where it was going to go. Tip number 3, if I'm in an unrealized profit without a plan, meaning, hey, price went up 1% on my $10,000 position, I didn't place a stop loss, I didn't place a take profit, what do we do? One thing that I like to do there's always a temptation to take profit early. A lot of traders have this temptation, and I can't always escape that temptation. So what I do as like a compromise is I take half profit and let the rest run with a stop loss. So I'll give you that example right there. $10,000 position, price is up 1%, meaning you're up about $100 worth of Bitcoin. Now you could take $5,000. You could take $5,000 out of that $10,000, which is a 50% profit, and you would get $50 from that of realized gain, and then you just let the rest run with the stop loss. Now, when you do that, you kind of get the best of both worlds, where you took profit already, so you have something in the bank. You took that profit, but you also have an opportunity for more upside. And if price goes against you, then you might just make a tiny gain overall. This is not what you should always do, guys. I mean, this is just something that I like to do in some situations, but there are situations where you should just let it run. Of course, place your stop loss. If you're just in an unrealized loss without a stop loss, place your stop loss and just let the rest run. You don't have to always take a half profit. Or if you think, this doesn't really look that good, then you could take a full profit and look to enter at a better price. There are a lot of ways that you can make yourself better off with an unrealized gain. But I would think that the worst thing to do is just do absolutely nothing, because if price goes a lot against you and you don't have a stop loss, you could go from, hey, I'm up 100 to I'm down 600. So place that stop loss and or take a half profit and let the rest run. Tip number 4, with a realized loss of a moderate to large size, I'd say just stop trading for a day or two. It's so tempting. If you have a $10,000 account and you lose $2,500, you're like, oh my God, I just lost like a large portion of my capital on this trade. It's so tempting to try to win that stuff back because you just want to go back to break even. That's very tempting, but you got to resist that urge if you're full-time. If you're a full-time trader, you have to resist that urge. It can be tough at times, but what I do is if I take a moderate to a large size loss, I mean, look, there may be great trading opportunities, but I'm just not going to take a trade. I know some people have the ability to take trades even after they have a large loss, but for me, I found it best to just stop trading for like 2 or 3 days. Here's why. When I take a trade directly after I just lost a large amount, my mindset and other people's mindset is going to be, how much can I eat away back at this loss? Can I go from minus 2,500 to minus 0? Is that possible? Can I go from minus 2,500 to plus 1,000? Is that possible? But when you take 3 days off and you look at your trading account again, what can happen is you don't look at it like, oh, minus 2,500, minus 2,500. You might just look at it as like, oh, it's neutral. If I make $500 today, I make $500. It's not like I'm now down 2,000. Well, you technically are, but mindset-wise, you need to be able to take every trade as an isolated trade. That's generic advice that I just said, and that's why, to make that less generic, I'm saying to take some time off and then go back to trading, because you can remove some of that pain of that loss that you recently had. So that's probably one of the most important tips that I would give, so that you don't make a large mistake and end up losing your entire account. Tip number 5, foster a healthy mindset. I know this sounds like guru, motivational stuff, but not surprisingly, when you feel very sharp and you're feeling like, oh my God, I'm totally focused, you're probably going to take better trades and you're probably going to practice better risk management. Everyone has a different strategy for getting to that super focused stage. I have mine. My strategy, which might not work for everyone, but mine is, the classic: eat healthy, limit the caffeine, don't drink alcohol, just eating healthy, and then more importantly than those by far, do cardio. Go for a run, run outside. When you do cardio, what I found is that I have better recall of information. I make better connections, so I can say, hey, if this and this happen, then this is more likely to happen after I do a lot of cardio. Or 3, if I start to have a loss, I can say, oh, okay, I can just, put a cap on this loss and think a little bit better emotionally within that trade. I would highly recommend working out or finding some way to make yourself healthier, because that can actually make you much sharper in the mind. If you find another way to, get to that very clear focus kind of flow state, then by all means. There is no NZT48. If you get that reference, then there is no NZT48. There's no magic pill that's going to make you a better trader. There's no magic pill that's going to make you very intelligent and, willing to assess the probability and statistics of every single thing that happens around you. That's not life. But there are things you can do in ways that you can become much more focused and more clear and more sharp and more resilient, like that, And I think that meditation, cardio, and potentially even stuff like cold showers, just kind of like random stuff like that can really help you in your focus. And if you do that, overall, I think that your trading is going to improve, almost guaranteed, because you're going to have a lot less issues with big losses, and you may be more inclined to have to let trades run more and to get higher profits. All right, guys, that's going to be it for these 5 tips for today's video. I'm just going to do a quick rundown of each of them just so you guys can remember them before you close down this video. Number 1, think mathematically. You think mathematically so that when you take that trade, you're not really scared of your max loss. Tip number 2, if you're holding an unrealized loss that doesn't have any plan, place your stop loss, place your take profit, leave your computer. Move on. Tip number 3, if you're in an unrealized profit and you don't really have a plan, you can do the take 50% profit and let the rest run with a trailing stop loss. Or you can assess the trade and either decide to let the rest run or decide to just take all profit. But taking 50% profit and letting the rest run can be a great strategy for finding that middle ground. Tip number 4, when you have a large loss, I would recommend just stop trading for a few days. And then you can get your mindset back to equilibrium. Instead of the negative mindset of, oh, I lost this amount of money, I want to regain it, you can go back to normal and then just take, trades like you normally do, and hopefully maybe you slowly go from a large loss to a small gain or even a large gain. Last tip number 5 is foster a healthy mindset by doing things that are healthy. I mean, it's not rocket science. If you work out, if you eat well, and if you do things that make you feel better, you're probably going to end up trading better, and you're going to have more emotional management within your trades. Everyone has a different way of getting to that state of focus. Whatever yours is, try to exploit it to the max, because that's probably going to help you more than any tool out there on the market. With that, guys, I hope this was helpful. And if you have any questions about the mindset of trading, then you can direct message me, you can send me an email, or you can do mentoring if you want that as well. See you guys, and happy trading.